as a collective here within our chats, we have actually taken positions short now at the end of the week. But rather than taking a single asset short, like short selling the Apple stock, we've taken short positions on the indexes. So
so like if this is the S&P 500, the ticker is SPY that you can trade. And looking at that here on the left side, so here we got a bear signal right on top.
Yeah.
This is the 4-hour chart again. It's lower time frame, but you can see how like prices just been on a downtrend since then. And looking at the weekly, that's a bearish candle. That's a bearish engulfing candle.
Pretty damn bearish. Yeah, and you can see that the wick is shorter than the previous candle's wick as well. Like quite a bit of bearish indications there.
So like I think the SPY, it closed bearish. Apple also closed bearish. I think a lot of the indexes like SPY and QQQ are still like Apple makes up a lot of these indexes. So like if Apple can potentially like drag the whole market down,
Yeah, exactly.
Happen. And
the whole market is looking like it wants to cool off too. So
exactly. Which like, and also like so we did buy some SPX and SQQ. These are ETFs that act like 3x shorts of the main indexes.
Yeah, exactly.
That is, if you don't want to directly short it, we can also directly short it. But like people who aren't familiar with shorting, you can like buy these indexes.
Yeah, exactly. Generally speaking, short selling involves taking a loan of shares of something, selling the shares, and then buying the shares back later to satisfy the loan. And doing that is, I mean, I made it sound very simple in my explanation just now, but doing that is not super. It's not super straightforward. You do need to manage the margins. There's quite a bit of volatility that can affect the margins that you're using, and it can be quite difficult. And so, like Sid was saying, for traders who are a little less comfortable, opening and maintaining their own short sells, there are these ETFs, which is just exchange traded funds. So they're just stock tickers that you can buy directly in your Robinhood or your TD Ameritrade or your Fidelity, wherever you buy your shares. So you would just type in, like SQQQ is the stock ticker, for example, or here we're looking at the SPSX, or this is just the SPY. But if you pull up those stock tickers,
SPXS.
So like for the QQQ is the NASDAQ index, the SPY is the S&P 500, and so SPXS is a ETF that offers you 3 times inverse exposure to the SPY, and SQQQ is the same thing but for the NASDAQ, so 3 times inverse exposure to the NASDAQ index. And just so that's perfectly clear, what that means is if the NASDAQ index drops 1%, the SQQQ ETF in theory will raise 3%. So you're getting the inverse performance times 3.
Exactly. And you can see the QQQ, this is a QQQ chart too. For the NASDAQ, that closed bearish too. Yeah. Exactly like the S&P 500. So we did buy some SQQQ to short it.